All right, coming up right now is the stock market analysis. We're going to look at the S&P 500 short-term view, and I'm also going to look at the Dow Jones Industrial Average, which is throwing off negative warnings. Right now, the stock market under a lot of pressure and coming into an area of support. And we've had tons of people writing to me about the continued upward trend and about the fact that this is the support, and everybody's looking at the cycle counts and saying, okay, this is where the bottoming should be coming, and the general bullish attitude remains when we look at these charts. So we're going to switch over first, and I'm going to look at the short-term chart. That's not it. Little peek that you have right there on our big picture analysis on the gold market. Remember, that's a level 4 chart. I'm going to close that, and I'm going to go in here to the S&P 500 and move over to the daily chart. So this is the chart that the world seems to be looking at with this uptrend right over here, and this has our complex cycle structures on there, which have a lot of meaning. And you can see in here that the cycles on the bottom right there are giving you a good sense for the average 20-day length that is in there. This cycle bottomed on 21, 19, 23, and that low right over there that occurred a couple of days ago, 3 days ago, was the 18th day low. Problem is that right now the market is taking out that low and making a lower low. So what's happening is, I'm just going to zoom in right over here so you could see a little bit closer, is that this low right over here, which was right at that point, now becomes, and I'm going to change this right in front of you, and that is now 21. So we're now on the 21st day off of this low right over here. And we're still in the uptrend. So just a little lesson on cycle analysis. These are the ideal cycles. This is if it rallied up through half the time frame and fell through half the time frame with no force on either upward or downward. So it would be perfect up and down, as you see here. When the directional component or money flows through the principle of summation affect it, then it takes these cycles, and when there's an upward money flow, it changes the configuration of them, as you can see right in here. And you get messaging from that. The message that we're getting right now in this corrective zone, you can see positive, this corrective zone, positive, as it's still way above this low, is saying that the next cycle should be positive. Now, this is the midline right over here, and we'll be building the complex structures. But what I wanted you to see were these numbers were, because until I have the anchor point in here, I really can't build these, which we'll be doing for our members for the Future Speak show on Wednesday. So make sure you become a level 2, 3, or 4 member to be able to watch that show on Wednesday. This is very important, and this period over here is very important. I can tell you, as I said in the very beginning of the show, and that is that the obvious often becomes the surprise. And the surprise very well may be that there are aspects of this market that the market is giving us warnings that things are changing. You can see in here the slim ribbon PO on the bottom. This is the signal line, and that is goes along with the slim ribbon right in here. And this long-term momentum, this short-term momentum that we're looking at right there, has been in positive mode all the way back from way over here in May until now, and this is now turning neutral, as you can see right there. So that is a sign of some weakness in here, and we don't have the bottom in here yet. This could fall. Remember, this was 23 days. This could end up to be 23 days, and we could fall sharply into Monday and Tuesday and begin to threaten the warning number in here that would come at the 78.6 under 44.05. If it got down there, the probabilities of going to a new high would fall sharply. And so this is really an important couple days in there. And then this rally in here, the magnitude of advances have been huge once we get into the rally phases. So it has to prove that it has that strength. And if it fails in these resistance levels over here and then turns down and breaks whatever low it made in here, it will be signaling a major top. So these are really important charts to be looking at, and always pay attention to cycle patterns, momentum conditions, and how it acts in the support resistance zone, which we create through our swing high, swing low analysis. So we projected last Friday that the market would decline through Wednesday or Friday because of this corrective zone, these cycles coming to the downside. Starting early in the week, and this cycle may be shifting over a little bit, we will be looking for a rising phase to begin. And we would expect that rising phase to begin, let's just say Monday or Tuesday, and then be moving up for the next couple of weeks. If that was substandard, if it didn't get that far and turned down, it would be a strong message. If it blasted out on the upside and then, did the same big magnitude advances, then we would know we're still in this upward condition. The market's going to teach us over this next couple of weeks about its condition. But I want to go and look now at the Dow Jones Industrial Average, because while the S&P 500 and the NASDAQ and the Russell has improved in momentum on the intermediate term, the Dow Jones Industrial Average has actually weakened. And while these other indexes have turned neutral on the short-term patterns, the Dow Jones Industrial Average has now turned negative. So I'm going to switch to DJI in here, and I'm going to put on the daily chart analysis right over here. Where did I do that? Oh my. Maybe I wanted to go to the weekly right over here. There we go. So we're just going to focus on the weekly here because for some reason I lost my daily analysis on there. What we're looking at are the harmonics in here on the weekly, and this is the beautiful chart in here on the Dow, which shows harmonics of 11 weeks, 22 weeks, and 33 weeks. And you can see that. So this beautiful, powerful cycle right in here on the big dominant cycle, and this very powerful cycle right over here. I want you to note that when it actually turns negative right over here, you can see it then really begins to struggle. Here it barely was even able to turn negative, and an early downturn as you get right over here shows negative momentum and the potential for a pretty serious decline coming out over here, which takes you out into next year. So this downward turn in momentum is very key. You need to get underneath this line right over here. That's at about 33,230 to be a significant breakdown. So it's a long way down. It's about 1,300 points on the downside, but that's the key. If it breaks there, you have a major top. The fact that it's rolling over already is a warning that we see in here on these harmonics. I'm sorry, I thought I had the daily chart to show you, but I actually see now that I didn't save that work. So you can see it here on the weekly right over there as we get that downturn in momentum on the Dow. And these, looking at this, I mean, these are really the giant stocks, the major economically sensitive stocks. You got to wonder if this is some signal that they're turning down ahead of the Fed. As we see that. Now, the Dow Jones Transportation Average is something I want to show you also because I think it's very significant. So I wasn't going to do that, but since I messed up the Dow Jones average and don't have that daily, I want to show you this. So you can see in here the green phases is where it starts the rise, and the yellow ones are where it goes into corrections on the Dow Jones Transportation Average. We talked about this rising and that the cyclicals may lead the way on the upside. That's now failing, and we're almost getting a breakdown right over here. That is extremely important when you look at that, and trading underneath this 14,140, which is not very far away, would be a breakdown and signal a large decline coming out into around February of next year. While I'm here, why don't I look at the daily chart right there, and I want you to see that this is getting very close to a lot of trouble. And that shows you that it actually has failed here in resistance and is looking at the short-term breakdown right over here, which is at 14,040 approximately. And that would give you a real problem if it got below there. It would be signaling that that intermediate top is likely to come, and that gives you a sense that the stock market is not only has had a lot of correction already with 13% decline in the transportation average, but now is threatening a resumption in there on the downside, and a good likelihood, looking at this on the weekly, that it is going to break down, and that those very important stocks in the transportation average, because that's how the country moves, and also the big stocks in the Dow Jones Industrials look to be rolling over right now. And that is the warning to me that says that the signs are that there is a change going on, and that this upward trend that we've seen in the S&P 500 short term that everybody's looking at and seemingly is confident is going to continue. I think that's the warning that there's going to be a change in here. And yes, we're looking at a potential low early in the week and a rally for the next couple of weeks. If it doesn't get up past those resistances, if it doesn't make a new high, if the rally doesn't last as long and begins to move down and breaks the anchor point that is going to be created in the next couple of days, most likely, then you're going to get the message that something very distinctly has changed. And I think you would then have the warning to be able to act accordingly on your trading bias and maybe even your investment levels.